and we are live. Got a couple of people tuning in now. Give a couple of people a chance to join here, and then we'll get rolling. So for those that are here now, I assume most of you guys are coming in from the Discord chat. So I apologize that the thumbnail never correctly updates on that bot for some reason. But we got everything working out. We're going to go here live with RustyRuss from Options Alert Penguin. So I want to do more of this type of thing. I mean, you guys know at this point that I'm really looking to go full-time with YouTube. And one of those things that you have to do is collaborate with other people. There's really no way that you're going to be able to pull something off like this by yourself. And this is kind of the only, the easiest and quickest way that we can get more people involved in the projects that we're working on. We can get involved with what other people are doing as well. So Rusty reached out to me like 2 months ago, and it's just really hard for me right now finding time to do stuff. But finally, we were able to pick a time and get started together. So I got, I don't know, maybe an hour until the baby wakes up, and then maybe baby Becky can join us for the last little bit of our meeting. So what are we at now? We're at 52 people. Let's give it another minute before we really get into it. But hey, Russ, you want to introduce yourself and just say hi?
Sure. Yeah, I'm Russell, RustyRuss, with OptionsAlertPenguin.com. I run an Options Alert call-out service for people trying to get in on some put credit spreads, just data gang nation in general. Trying to get you some put credit spreads. We don't do weeklies, just some put credit spread longs. So that's what we're trying to do.
Yep. Hey, we all know the put credit spread. Awesome opportunity when markets are increasing or when they stay flat. You can even have the market going down a little bit, and the put credit spread can still pay out to its maximum value. Gives you some protection to that downside. As far as sound goes, is everybody sounding okay? Can you guys hear Russ? I think he's coming through my speakers into my mic. I think that's how his voice is getting broadcast. So we got a couple of little things going on. But once you guys tell me I'm good, hey, we'll get started. He looks like a GTA character, apparently. I don't know which one of us he's talking about, but according to Jesus Christ, apparently, someone looks like a GTA character here. I'm hearing we got great sound, so sound is actually better than usual. Enrique can hear us. All right, hey, we're good. And then for those of you guys just joining, hey, thanks for tuning in. Hanging out with RustyRuss, who runs OptionsAlertPenguin.com. And his strategy is all based around put credit spreads. I think most of you guys know what that is. You are selling a put, and then you're going to pull premium from that and give back a little bit of that premium in order to buy a put at a lower strike price. What that allows you to do is you walk out of that with a credit. You're going to start that trade off. You haven't had to put in any money except, you may need to put in your collateral, but you're starting off that trade at your maximum profit, and all you can do there is lose. All right, so you are going to walk away presumably with the full amount of premium that you collected up front. I don't think I explained that very well, but you guys already know what it is anyway. So, yeah, opportunity now to talk with a hotshot whose strategy is all based around this. So, Russ, hey, tell us, how's it been going, man? How's your put credit spreads been working other than today? We know we're all getting hammered today. But overall, how's it been going?
It's been going pretty well. I was heavy in attack. I had a good strategy in January. Just went into tech, waited until Amazon had earnings, sold all my tech, and switched right into cyclicals. Right now we have some play, DraftKings, Disney, ExxonMobil, all doing pretty well. So still well above our strikes. I'm telling people to go ahead and hold some cash. So as they're coming down, like today, like the reopening play for next month, we can go ahead and continue to go into those until I say maybe about April, because we're starting to see Square, for example, come down to 135, which is pretty good. Disney right now, 191. You know what I mean? Marriott's still at the moon. But that's what we're doing. We're looking to, it's a long-term investing strategy. It's the same. It's basically just going long, but using put credit spreads to do that. But in addition, I do not encourage anyone to go ahead and liquidate your Roth IRA or your long-term investing account. Like you should really have your own separate options account. Even with $1,000 is fine. And keep it diversified just like you would your longs. And, rotate as the market rotates. We're going to rotate into tech here in April probably with Square, PayPal, Amazon, Microsoft, Apple. I'm kind of done with Facebook. I'm not lying to you.
Yeah, I hear you. I mean, but speaking of, all right, so you bring up a couple things I want to talk about right now. So when you're talking about how you're going to rotate into tech, so it sounds like you've actually avoided most of the damage that a lot of us have been suffering over the past week, where we've just watched, other than yesterday's recovery, we've kind of watched tech have a little bit of a difficult time lately. I know for myself, I watched like $25,000 in my account melt off on Monday, and I was pretty upset about it. But you've been out of tech for a little while. It sounds like you've been in more like industrials and energy or something like that. Is that right?
Yeah, industrials, commodities. I'm starting to like lumber as well. Lumber and oil were real easy plays. I had Exxon at 49. Like our strikes were 48, 49 when we got in. Like it was insane. And then I even upped the strikes to like 50, 52. At some point, it's still fine. Exxon's bleeding today, and it's still well above our strikes. I think it's straight out of the the hedge managers investing playbook. I mean, I try to go with the market makers. What are they thinking? They're thinking interest rates are on the rise, and everyone's trying to get away from tech.
Wait, so I didn't even know that you could do credit spreads on commodities, like straight the commodity. I thought you would have.
Well, not straight the commodity. I like to play over like Exxon Mobil is a company. I'm not just doing /CL.
Okay, I'm just making sure.
You can do credit spreads on a future, but that's like doing crack and meth at the same time. Do not.
That line sounds familiar. I think I've said that before. If I'm not mistaken. Don't do it yourself. Okay, cool. Right on though. And I mean, you brought up Square. I mean, that's one I've been looking at as well, and I'm seeing a lot of revenue growth. I'm seeing a strong positioning in the industry. Is that kind of the way you're looking at it as well? I mean, is Square the way to go for somebody who's looking to get in on a stock that has really taken a hit lately? Not too much, but a pretty sizable chunk has come off its top. Now
100%.
I'm looking at it as an opportunity to get into it.
I mean, it's 131 right now as we speak. I really like Square. Another thing about Square is I'm starting to see, they got the Bitcoin. They're starting to buy more Bitcoin. They said that they're rolling out Dogecoin, even though they might
I'm
not
still
yet.
not sure how to say Dogecoin, Dogecoin.
Yeah,
everybody says it a little bit differently.
And additionally, they're kind of like Robinhood. You can buy shares on Cash App because they own Cash App, right? Mm-hmm. PayPal and Square, Cash App, Venmo, that sort of thing. Whereas Square owns Cash App, and I think like people are moving from Robinhood to Square. Like people that just want to dip their toes in. They don't want to learn technical analysis. They just want to. It's too hard for them maybe, and they're just trying to buy a couple of shares, and they got them a Cash App. So I'm starting to see maybe we got some opportunity there. I'm saying like right now. I mean, if it drops down to 220, 225, like I'm in. And if you're buying straight up shares, I mean, right now is buying like a tiny position and continue to average down because it'll probably come down. But it's a real good opportunity. I mean, it'll be over $300 probably by the end of the summer for sure. It's easy money. I
mean, I'm looking now at taking my paycheck, that I'm getting in a couple of days, and using it to buy a Leaps on Square. And then with that Leaps, maybe I'll let the stock recover for a little while. But the real point of it is to sell other calls against it. So moving into a poor man's covered call. And I think for a stock that has the right volatility, it's got the right growth prospects, I don't think you can go wrong with a stock like Square. So I'm glad you brought that up as one. And for those watching, hey, check it out. Square that's one I like. Rusty likes it too. So let's go for it. All right. Multiverse Media.
And what we're here, because I'm saying like we're rotating into, for example, Play, which is Dave and Buster's. So some will Play. MasterCard's really good, but like Disney's really good too. But like ExxonMobil and Marriott, like their fundamentals are still just not the business. So like I'm rotating into them because it's cyclical. They will do well for the next couple of months, but then as the summer wears on, maybe not so much. Whereas tech does well year round. They have a balance sheet behind them, so you can just hold them forever. I really wouldn't. I know I'm saying, hey, we should do some cyclicals right now, but I'm doing it for a short term play until tech comes back. Like I wouldn't hold I wouldn't hold Marriott long term. I'm not trying to be mean to Marriott. Like if you're watching this, don't sue me.
No, I don't think Marriott's too worried about it.
Rule 12 motion, waiting for that answer.
Yeah, we look at like the shape of the economy right now, and it's going to be a stock pickers. I think it's going to be a stock pickers market for 2021. I mean, 2020, the end of 2020 or second half of it after the summer was pick a stock, buy it. That's all you really had to do. And as long as you stayed away from oil, you were going to be in great shape. Just about anything else was on the rise. Now that we've kind of seen all that growth getting priced back in, I wonder if those things like all the casinos, the hotels, the cruise lines seem to be doing well. Where are we going to actually see the recovery, and which direction do you go if you're looking for bullish plays? I mean, I'm always looking at the big tech names, and now that we're starting to get wiped out this week, I'm starting to feel embarrassed, like I'm losing money or something. But there's more directions to rotate into.
Yeah, I mean, you could have definitely taken profits at the top. But if you're holding long shares, I mean, you can hold tech forever. You can hold that for 30 years, 40 years, it'll be fine.
I'm probably going to die with my triple Q shares. I mean, I don't plan on ever selling those.
I think Win and Norwegian or CCL, like, if you're trying to do dividends, like, you could probably hold that in your dividend account for sure.
Are they paying dividends yet?
Norwegian, I think they cut them, didn't they? They did. A lot of them cut those dividends.
Well, yeah, they didn't go on they didn't actually put a ship at sea for an entire year. Although
right,
you know what they have been doing
last year.
But you know what though? I mean, that also presents an opportunity though, because once they start getting back out on the ocean, they're starting to make revenue again. Now you're in a positive position where you got in at a lower price, and now the dividend is starting to pay out again. The stock price will increase, and you're going to get a decent yield because you bought in at such a low price. I kind of did that with Prudential. I mean, Prudential took a nasty hit, and at one point the dividend yield went to like 8.5%. So I just bought shares. That's in my dividend portfolio now. There's probably other opportunities like that too. And some of those airlines, they could be.
Yeah, I mean, when it comes to airlines, I really like I like Southwest, but I mean, a lot of people like American for some reason and Boeing, but you know, I'm all Southwest. I think they definitely are some really good opportunities in this rotation play if you're holding long. But you know, I would barbell. You know, get some tech. Yeah. I also like. What do you think about what's it? Plantar?
Palantir.
Palantir. Yeah.
Yeah. So I use Palantir at work actually. So yeah, there's a lot of people, they say, all right, Palantir is all about making sure that the illegal immigrants wind up in concentration camps. And it's not quite that dramatic all the time. Palantir, it's mostly about being able to map things and ingest data. I use it at work sometimes. It's not the best tool, but it is it's a good one. It's something that's going to be around for a while. So I was using poor man's covered calls for a while until the stock price went to like $38 during that meme stock boom that we saw like earlier this month, end of January. They all got called away, but I'm still holding one Leaps long, and that is all entirely based on profit. I already withdrew everything that I initially invested. I think Palantir is a good long-term hold, but it's going to remain volatile because nobody knows what it does. Even the analysts barely know what the company does. All you can see is a snapshot of their numbers. And that's really tough to trade off of because it's difficult to gauge their growth prospects. So I expect that until you start seeing really consistent growth out of Palantir, we're going to see this zigzaggy up and down pattern. If you buy the dips and you sell the rallies, I think you can stay doing really well with Palantir. Or buy it for a really long term. That's my point. For sure. A ASDF said Carnival Cruise Line's dividend is actually 7.5%. So they didn't all cut their dividends. That's pretty impressive that they were able to maintain that.
That's huge.
Oh, and I can tell you why everybody likes American Airlines too. You started questioning that. People like AAL because it's the cheapest. That's exactly why. I promise. I mean, I bought AAL just in my Robinhood account just because it was the cheapest one, and I wanted to get in on that airline. And Southwest, I think, is like pretty expensive now compared to it. It's like, what is it, $50 or something like that?
Yeah, it's more expensive, but even still, in terms of percentage, it rallying from $40 to $55 a share. I mean, percentage wise, that's still pretty good.
Oh yeah.
Even though the dollar amount of the share is kind of is more expensive than AAL, but I mean, looking at their balance sheets, like, I mean,
they're a lot better off. Yeah,
Southwest is way better off.
I think Southwest actually has the strongest balance sheet, if I'm not mistaken, when it comes to all the airlines. Like, they're the ones that have the least debt. They're the ones that are bleeding the least cash. Meanwhile, you've got American Airlines is leveraged in. They've got the most debt. And for some reason, they're the ones that everybody talks about when they buy shares of an airline.
Yeah.
What do you think of the ETF Jets? The whole U.S. airline and some of the Canadian airline industry. Are you familiar with it?
Yeah, I'm familiar with Jets. I mean, if someone wants to go long just Jets, I mean, like, that's fine. But I mean, when you're buying Jets, you're buying I would hate to say Delta. You know, I don't want to disrespect Delta right now, but like, I've heard some things in regards of various sexual harassment lawsuits. Like, I don't know. So if you're buying it, and then what was it? American Airlines, their debt. You know, like, I don't know if you want to hold the bad ones, but Jets. I mean, if you wanted to do Jets, I mean, it's really not bad. Instead of just, for example, Southwest straight up. I mean, it's not terrible. I mean, it just made an all-time high. I mean, what is that? It made a 20-day high recently at 27. It's back down to 26 today. I mean, I'd let it bleed a little bit more. I think tomorrow we're going to see some blood. Maybe buy some today, buy some tomorrow.
Scaring me, man. But
blood in the streets.
The reality is the market has been just on this up and up tear for a long time. We need some dips in order to get back into stocks. If you want to take on a long position, especially around payday, it's kind of nice to see the stock prices come off a little bit. As much as it hurts, what you just said, I kind of hope, half of me hopes it comes true. Because it's about to be payday. And I would love to get in on some more shares when the prices are actually cheap, rather than just watch it just fly higher. I mean, no pun intended about jets, but...
Yeah. Like right now, I'm looking at, I think Dave & Buster's can go to like $50 between now and like the end of March. So I'm thinking like maybe like 38, 39 strikes.
Which
like
one?
expiring 319. Ticker symbol play Dave & Buster's, and I like
Dave &
Disney
Buster's.
right now too,
Okay.
like 90, 92, 50, something like that. Expiring 319. Like I'm seeing a lot of good deals right now, but then you look at Marriott, for example. I've seen Marriott, like it got bullish the last 4 or 5 days. Like it was ridiculous. People were just all in on getting out of their house.
That's what we've been hearing on television for the last like year, is as soon as people can start leaving their house, there's going to be pent up demand for things like this. Like people being able to go gamble again, go cruise again, go get back on airplanes. These industries have been so beaten down, for a year now. It's been an entire year since we've been on lockdown or some level of lockdown. To be able to get everybody back out of their houses and getting back into casinos, I mean, that's going to be a huge boost for that entire industry, for sure. I'm not much of a gambler except on stocks, so you won't catch me at a poker match. But I understand where people are coming from. It's been tough this past year, just being stuck inside. All the bars are closed and everything like that.
Yeah, it's terrible. I feel bad for people who live in like Oregon or Washington. Nothing but rain. It is dark there, and you got to stay inside. Like, oh no.
Is it like that? People... I hope not.
Oh, it is. I just came back from Washington. I was living in Seattle for a couple of years, and it was dark 9 months out of the year because of all the cloud coverage. And it doesn't really rain hard. It's just misty. It doesn't even smell good after the rain. Here in Arizona, when it rains, it smells good, and then it goes away.
Which part of Arizona are you in?
I'm in Tucson.
Oh, I live near there. I lived in Sierra Vista when I was in the Army. I was at Fort Huachuca, like 2 miles from Mexico, basically.
Oh, nice.
I liked Tucson, though. Tucson was kind of a fun city. It was nice. And big real estate opportunities, if I'm not mistaken.
Oh, yeah.
Yeah, anybody who lives in or around Arizona, buy some property because it's getting more expensive out there. I kind of liked it, honestly. I liked Arizona, even though it's desert. It's not sandy desert. It's like mountainous desert. So there's always something fun to do out there. When I was first found out I was going to Arizona, I thought it was going to be like Saudi Arabian looking, but it's not quite. It's sand. It's not sand. It's dirt and shrubs and mountains and stuff like that.
We have Red Rock Mountain. Like, it's beautiful out here, and then we have cactus, and it's pretty and beautiful sunsets. It's not.
Yeah.
No,
Dude, I was so excited when I found my first cactus that I picked cactus fruit with my bare hand, and I'm never going to do that again. It was a major mistake. Anybody who doesn't know about cactus fruit, it's actually really good tasting. It's got a lot of seeds in it, but the juice is sweet. But it's got these tiny little barbs on it that you can't really see with your naked eye unless you look closely. And if you grab it with your bare hand, it's going to take you like an hour to get all the little barbs out of it. It was pretty terrible. But if you can pull it off, it's pretty good. But anyway, so back to stocks. You said you're getting back into some of the more cyclical ones. Looking at coronavirus is we're on the back end of it. Hopefully, people are getting back out of their houses. So being focused on put credit spreads, how when you're setting your strikes, you're bullish on these industries. Are you looking at selling at the money strikes and then buying slightly out of the money, or are you getting a little more conservative with it and selling the out of the money strikes? How's that work?
Well, I like to wait. I like to be really patient, and I like to wait for a correction to like a huge moving average on anything I'm looking to rotate into. And I like to set the strikes at the money, and I like to get 50-50. So I would like to double. So on a $2.50 wide, $2.50 wide, I want $125 in credit per spread. So I'll set it at the money. The only time I'll be super duper aggressive, and again, I like to split up the account to at least 8 positions. Like to have people do that to that are in the Discord. Is like if we're trading something that's like super volatile that I think will bounce up immediately. For example, yesterday, Blink went down to 32. I was like, we'll put the strikes at 33, 34 and collect like so much premium. It's stupid. Yeah. But usually we're staying at the money. We're not like, because I feel like when you start putting your strikes like put credit spread strikes above the price, or like you might as well just yellow an FD at that point.
Yeah, I mean, you're kind of right about that. If you get too aggressive with the strikes, you're really banking on the stock rising. And if that happens, you would have been better off with other strategies instead of the put credit spread. I see what you're talking about on Blink, though. I mean, what was up with that, like, 25% crash? Like, was there a reason behind that?
It was the Lucid deal. Or was it Lucid Motors?
Yeah, CCIV. A lot of people in here, I know a lot of the people in the Discord got just nailed with CCIV. I mean, I've pretty much stayed away from SPACs unless they're owned by Chamath, but a lot of people just got smacked on it. So that had an effect on Blink? Were people looking for Blink to partner with Lucid?
Well, the entire EVs just came dropping. Like, because Blink is an EV play, so just EV just died. We saw Tesla die, like everything just died. And then I see the most volatile ones, like Blink and Neo, will drop several dollars, but they're only $40-$50. So if they drop $5 or $10, that's a huge percent. And if they drop too far too fast, they're going to come bouncing back up. Yeah. And then additionally, this is the Biden administration, so I mean, I'm seeing those bullish overall long term. So I was pretty comfortable with it, and with the current economic landscape in the administration. So I was just like, let's go. Let's do some Blink.
I really like what you just said there, because I think a lot of us kind of need that right now. I mean, we're looking at the Dow down 444 points, NASDAQ down 400. That's 3%. I mean, I know I don't even want to look at my account right now. I'm sure it's like an absolute bloodbath. So those of us that are absolutely struggling in the tech sector or anything like that right now, hey, if we want to get back in the game, I'll put it this way. What is your buy target for rotating back into tech, so that we know when we have other adults in the room that want to get into that sector? When should we expect to see more people getting in like yourself?
Well, I don't really have I don't think in terms when it comes to rotation, I don't think we should think in terms of price target as much as we should think in terms of people being exhausted of the reopening play. Like, once people are like, okay, there's no more meat on the bone for this reopening trade. And these companies, like, their balance sheets really aren't that good. Like, when you start to feel like the reopening play is, like, way overvalued, this is the time where you're just like, let me go ahead and cut that. What's tech doing? Okay, Microsoft looks pretty good at 225. What? I don't know if it's that right now, but if it is, buy. So that's what I like to see. 229, Microsoft's 229. Like, I'm saying a put credit spread right now on Microsoft at the money expiring in July, you'll double your money for sure. Like, just trades like that. I don't know. And it depends how patient you want to be, too. Like, can you wait until July? I don't know. I can.
I mean, at this point, yeah. I mean, I'd wait until as long as you want me to for this bleeding to stop, because it's getting pretty ugly out there right now. I mean, yesterday we saw a big recovery, but then today it's just, another step back. I've got some in the money. I mean, the only way I've hedged has been with in the money covered calls. And I mean, those are probably looking pretty nice right now, but it doesn't exactly help when you're losing thousands of dollars at a time on triple Q, only to see like one position, which is one in the money covered call, actually increasing in value. But it sounds like, based on what you just said, that you're already looking at opportunities now based on this pullback as opportunities to get in to go long once again. And you like
and yesterday was an opportunity to sell tech into strength. And that's why I alerted my entire Discord. I said, hey, because in February, I was having people, because I'm like, I'd like to preach, have 8 positions, okay? And don't get into all your positions the same day. Like, hold some cash, at least 10%. But out of those 8 positions in February, I wanted people to have 6 cyclicals and 2 techs. So, and the tech was the hedge, just in case you're wrong. And then if you needed to rotate your portfolio from there, that's what you do. But at that point, like, 6 of their positions should be green and 2 should be red. So I was telling people yesterday, hey, today's strength. Let's go ahead and sell into strength. I mean, it sucks, but that's just 2 of your positions out of 6. And then let's wait for tomorrow, which is today, to bleed, which I knew it was going to, because the Dow was at a ridiculous all-time high. And let's go ahead and get into those cyclicals. But I don't know. I think there's a learning opportunity. What happens when interest rates rise? I mean, we're seeing cyclicals run things and tech start to retreat, even though the balance sheets and fundamentals are saying tech is still the best. I don't know if you have positions right now, or you or anybody watching this, and you have tech. It depends how long you are. If you have actual shares, just go ahead and hold. Doesn't matter. But if you have options expiring soon, or spreads expiring soon in tech, you can roll. You can roll Apple forever. So you can either roll, or you can sell into strength and try to use that capital to try to make the money back and more.
You have
to
that,
do math on it.
Keep going. I'm talking to Shallow. I'm not sure how to say it. It's either Shallow or Shallow. He has this big love-hate relationship with Apple. And Apple itself, I'm a big fan of Apple because it's just in my buy and hold portfolio. I never plan on ditching those shares. I think my basis right now is like $50-something. Holding that thing forever. But for those that have gotten in recently, I think a lot of people are super disappointed that we've seen Apple just, its sales have dominated. It's made so much money. It's just on the up and up. And yet its shares are just like acting like the stock just got destroyed, or acting like, Donald Trump tweeted against them or something like that. Like it's taken a big hit, but I agree with your sentiment. If you are long shares because you like the company, you've got a good basis, you don't need that money for spreads, go ahead and hold the shares. I mean, this tech drop, it's going to pass. And big companies like Apple are going to be on the up and up during the recovery.
For sure.
Yeah, I'm right with you on that one.
Because it's really at the end of the day when it comes to market makers, they're all about that balance sheet, and they'll always be traditional about that, and about the balance sheet. That's never going to change. And like I'm telling you, you look into these cyclical stocks that everyone's jumping into. Like it's good to play it. That's what everyone's doing right now. Okay, I'll make me some money this month on cyclicals then. But we start to look at their debt, and opposed to Apple's or Microsoft's, and you'll see who's really going to be up there in a few years from now. Is where most people's account should be. And I keep saying you need to have a long account. Do not be YOLOing your entire account. Have a separate options account and just work it. I like the 20% strategy. For 6 months. Like if you want to do this options alert penguin thing, or just your own thing, put credit spread, steady nation, just take profits at 20% and just wait. Like even if it's like $40 off of a $300 trade, like that's pretty good. Eventually you'll be like $300 off a $1,000 trade or something to that effect, which is good. Just gains every single time is what we're looking for.
Speaking of which, so I get a lot of people all the time asking me, hey, I've got $1,000 portfolio. What should I wheel? And I'm like, it's going to be really tough. It's going to be tough to wheel with $1,000. You could do it. It's just you're going all in on one pretty cheap stock. I think a better approach to it would be using spreads. So, one of the things that you're here for is to talk about this program. We haven't really talked about Options Alert Penguin. For somebody that's got like $1,000 account, what advice would you give them? If they were to participate in what you've got going on in your project, how would you approach an account value like that?
Okay, so if you have $1,000, just to be clear, before we start thinking about options, I want everyone to, if you don't have a Roth IRA, you need to open that up right now with TD Ameritrade or whoever you want. That's fine, and $500 a month into longs, and that's what you do. And it doesn't matter what price you want to buy: Apple, Square, PayPal. You want to buy some cyclicals to Disney or whoever's Disney has growth and cyclical out of nowhere. That was crazy. Then that's fine. Do that though, if you can. And then with your $1,000, which is your options account, you can come to Options Alert Penguin if you want. We're $15 a month. I would say spreads, spread it up, keep your strikes low and take profits quickly. Watch that account go from 1,000 to maybe 1,200, 1,300 at the end of the month. Taking it slow, because if you're brand new and you don't know how to manage risk, and you're a little scared of rotating and cutting losses and flipping and having a diversified portfolio, then I say the 20% strategy is for you for sure. But with $1,000, you can get 6, 7 trades if you want. Especially on, for example, like we were doing DraftKings this week. ExxonMobil's like $50, which means the spreads you'll start to see dollar spreads, which means it's $50 per position if you can get $50 in credit on a dollar spread. So, it's completely doable. And if you want to use Robinhood to do spreads, because you only have $1,000 and you don't want to get hit with commissions because your profits are only $20 per spread, that's fine. But if you have $1,000 and you're doing your Roth, because you should be maxing out that contribution every year. Like additionally, you can do spreads in your Roth, but really calm down on that. Like you need to be mostly if you're doing spreads in your Roth, like 5,000 of your contribution is in longs. You don't ever touch it. And with 1,000, then you try to grow that from the profits from there. Then you buy more shares. That's what I do in my Roth. But if you're not consistently green with spreads for 3-4 months, which you can be with us, just go ahead and just go long. But with the grand, I mean, you could definitely come to us, and we could definitely help you work it with some spreads.
Mm-hmm. So I agree across the board with everything you just said. I want to add one thing to it. If you've got $1,000 portfolio, the most important thing you can do is deposit more money regularly. I mean, think about it. Who's going to make more money? The guy who has a $1,000 account and makes 19% in his first month, or the guy that deposits $50 a week? The guy depositing $50 a week is actually going to have more money by the end of that month than the guy who made 19%, which is really, really freaking good. So if you don't have the type of job, or you have a lot of expenses that are making it difficult for you to make regular deposits, find some resources that are around you. I loved selling my blood plasma for money. I literally sold my blood for money and then bought stocks with it. And that, even maybe that's a little bit extreme for you, but there's opportunities out there to try to find ways to either cut your expenses or bring in a little bit of extra money. And then what is $200? That's, that could be 2, potentially even 4 spreads. So you've got a lot of opportunity there to make additional money with virtual, not free money, but pretty darn close to it. Find ways to deposit, and that'll be even more valuable than being able to swing a big return.
Let's look at our own budgets, because we're a company too. We want to think of ourselves as a company. What are our expenses every month? If we can cut back on, if you don't need a car payment, I wouldn't get one. I mean, they only decrease in value. Right now I have the money to buy a new car if I wanted to. But I have a 2002 Cadillac Escalade, paid $6,000 for it cash a couple years ago. It still runs. That works for me. It's pretty tight too. And additionally, if you want jobs, jobs are, because a lot of people are on unemployment right now. A lot of people don't want to work. Some people don't. So people are hiring, and I really like staffing agencies. If you have your own job, you're doing well in your career and you want to hit up a staffing agency real quick, they have staffing agencies for you can work with children with disabilities. You can be a paraeducator. Mm-hmm. You could do staffing agencies. You can do manual labor. They'll send you out there and they pay weekly. It's daily, no commitment. They have staffing agencies. You'll work in a group home with the kids in the foster care. It's a little rough, but get yourself a little bit different experience.
I do a lot of short-term gig type stuff.
Yeah, you can do Upwork. Sell your skills on Upwork. You could do. I have some old cards I sell on eBay. Just made $600 out of nowhere. You gotta hustle. Gotta keep those expenses low. Because every dollar you spend is not a dollar you invest. Certainly.
Yeah, I'm very interested in this staffing agent. I've never heard of a staffing agency before, but they basically they'll have somebody that comes to them and they'll say something like, "Hey, we need 15 guys to go and shovel rocks," and they'll be like, "Yeah, we'll find somebody." And then people go to the staffing agency, they look for work, and they'll just, "Hey, you want to go shovel rocks for a day or two? Here you go. Here's money." And
sometimes it's easier than that. I've been to staffing agencies sometimes, or Amazon. If you have Amazon in your area, they'll hire you immediately. It's ridiculous. But staffing agencies, sometimes it's easier. They'll send you to, an assembly line thing, and you just stand there and do the same thing, move some boxes. You do they do some warehouse stuff. Sometimes they even have security jobs, or just standing out in the parking lot and telling people to come along at a mall or something, for easy money real quick on the weekend. It's completely possible. And and then depending on the skills that you have, for example, I studied social work and criminology and criminal justice. So I had some social work skills. So that's why, I could work with the children with disabilities or in foster care or adults with dependency issues, those sorts of things. They have staffing jobs like that. If you're a nurse, you already know the staffing game. There's tons of jobs. Yeah. So I hit them up. There's a bunch of them.
Is there a lot of work for totally unskilled labor, 19-year-old students that just got out of high school? Yeah.
Oh yeah, there are. There's a lot. There's a lot of jobs. I think express staffing, Terra staffing. You just Google staffing agency near me, hit them all up, and they'll hire you. You can have 2 at the same time. They pay weekly. It's really legit.
Cool. All right. So no excuses. Anybody who's got $1,000 portfolio, if you're serious about building it, learn while you're investing in the stock market. But when you when you need to build up that portfolio, staffing agencies could be a great way to take advantage of it. If you don't have that stable job or you just want a side hustle, this sounds cool. This sounds like an idea that I had thought of. I wish there was just a place I could go and just do gigs. They'll find gigs for me, and then I perform the labor and I receive money for it. Like, that sounds really cool. And I never thought that there was a place like that that actually existed. This sounds pretty darn close to it. So I'm a fan of this. I'm glad we talked about that, because I didn't even know what a staffing agency was. It sounds like a good way to get you some extra shares. And if you throw that into dividend stocks, then you have just turned your one day of manual labor into a lifetime stream of income. Something to think about. You might only get 5 cents a day, but that's, it adds up when you start buying a whole bunch of dividend stocks at the same time.
Also, don't sleep on security jobs too. Like, I used to work for Allied Universal. I think they're the best security company to work for, and they pay decent, but they'll work you overtime. Is the thing. You start getting overtime checks, and it's easy. If you're a student, do your homework at your desk. Like, I didn't do it, but I had people that are sitting next to me on the night shift, sleeping the entire shift. Like, don't do that though. Lame. But hey, no disrespect, Allied. You know what goes on over there. So it happens all the time. It didn't happen all the time. I'm just kidding. It's just some people are lazy. Take a nap for an hour. I was in the
Army. I see that. I remember seeing that all the time. Sometimes I was the one taking a nap. I'm not
even lying. He was military. He was Army.
It is like that. Yeah. I get it. If you guard this bench for 12 hours.
Yeah.
Okay. Yeah, sure, dude. All right. Got it. I'll sit on the bench and sleep. I'll wake up if somebody's getting anywhere near me.
I mean, there were 2 of us, and there were alarms, so it's not like, hey, alarm went off. Hey, let's handle this real quick. So it wasn't completely unguarded or anything.
Crazy.
But yeah, easy peasy. Security work, easy peasy. Super easy.
Yeah, when you're strong. I don't know if they're going to hire some 90-pound girl to do security
work.
They
will. They will. They will. Yeah, they don't care.
All right. Hey, so you've heard it here first, guys. Hey, staffing agency is a good opportunity. If you need a side hustle, you need some extra cash on top of it to buy some stocks, check it out, man. Just type in on Google staffing agency near me, and you'll find something that's worth your time. So somebody's asking here. I'm interested in your opinion on this too, Russ. I don't know if you're following it on YouTube. It says, so Mikey, what's your take on the treasury yields heading up today? So I'm afraid of any kind of yields increasing. Any fixed income yield increasing scares me, because that means that there's going to be less demand for risk. And I don't think a minor increase in fixed income is going to have a lasting effect. But if we start seeing regular increases in fixed income, that means less demand for equities. And less demand for equities means rotation out of that sector, which is what most of us are probably invested in. Any equities, U.S. equities. It scares me, and I don't like it at all. I want to see rate cuts down to -%. Almost. I want to see 0% rates. So that's your answer on that one. Russ, what do you think?
Yields are scary, but I mean, they're about to pump an additional $1.9 trillion into the system. I mean, that's inflation for sure. I think inflation is running the market. I think market makers want to get back in at a lower price, and they're bringing the market down, trying to scare people. I've seen it before. I say it is scary. It is a little scary that interest rates are going up, but really, are they that high?
Historically, they're not. No.
Historically, they're still pretty low. But it's scary enough. I think the impact of the interest rates is get out of tech, get out of something that was sort of ballooning. I mean, Square was a balloon at $300 yesterday. A couple of days ago. Okay, fine. But it's not a balloon $300  2 years from now, certainly. So I think people are just taking profits, and they're taking advantage of smashing the market with some bad news so they can get in at some good prices. I think inflation is going to run this for at least a year until 2022 when they start raising rates. I think that's when you should be scared is next year. I think it's way too early to be afraid of interest rate hikes. I think good old J Powell's going to keep that money printer going.
All right, good. I like you, Russ, because you give me the things that I want to hear. You tell me don't be afraid. So, but I do agree with you. Tech has for a long time felt like both the offensive and defensive sector. If you want growth, you go to tech. If you want to hedge against coronavirus shutting everybody down, you go to tech. And now, we've kind of become spoiled, us tech-focused investors. The focus is going to end up coming off of these very high volatile, high growth type industries if we start seeing fixed income increase and a rotation back into the industrials, into energy, into stuff like that. Maybe it is time for me to let that into money covered call get exercised on triple Q, and then take one of those tranches and invest it into something else that's going to be a little bit more stable and a more diversified economy than just the telework nation that we've known for the past year.
Yeah. It's been it's been telework for a while. It sucks. People are tired of it, but it did change things though. I think it still changed things. substantially long term. I think some of it is here to stay. Not all of it, but some of it is. I mean, I thought Zoom was going to crash to like $40, really, but like probably not. Like, I mean, these companies cut costs with Zoom, and they want to keep those costs down.
Now.
Yeah, we're on Zoom right now.
I mean, I don't think we're paying them anything, but what is Zoom at right now? It was up over 400 at one point. It's still close. It's still 388. What did it max out at? It was 450-ish.
It went up. No, it went up over 500, right?
Yeah, it did. You're right. In October, it was $568 for Zoom. I mean, that is like
that is crazy.
Special. I mean, that's amazing that it could have done that. Within 1 year, really, it like multiplied by 8 times in price.
It was nuts.
And we forgot about Tesla. I mean, we remember Tesla going up like that. I mean, I think it was a little more than 8 times over, but that's not the only one. We treated Tesla like it was unique, but there were other opportunities out there too, where stocks were going up like that. I mean, Riot was one of them. I think that went up like 6 times overall, even more than that, maybe like 10 times if you got in at the very bottom. Zoom went up like crazy. Shopify, Etsy, all those things just went flying.
Oh man, Shopify was maddening. It just went blitz. Full blitz.
And people ask all the time, like, "Hey, are we in a bubble?" Based on things like that, like they'll see Shopify go flying, and
I mean, take profits if you're asking that, though.
Yeah, well, I mean, that's a good point too. Take some profits, rotate into SPY if you're concerned about being in a bubble. I mean, it's hard to say that we're not. I mean, you look at the way the stock market has been for the past since 2010, basically, especially the tech sector. It's tough to say that this is going to keep going forever, but nobody wants to miss any time spent at this party. And when you see stocks going up, 25-30% in a year when coronavirus locked down the country, it's hard to say, is there any like bearish case on our stock market right now? I'm sure you feel it all the time.
I mean, a bear case would be an interest rate hike maybe next year or the year after, but like I think they'll be slow about it. Another argument that we were talking about that I'm hearing pros talk about on my LinkedIn are like Japanification. Japan did this. Japan kept lowering interest rates to the point where they can't raise them back up. It's like if you raise them back up, like things will drop. Like you can't raise them back up. Like, have we reached the point of Japanification, as they call it? Like, are they ever going to go back up? Like, maybe not. Not to the point that we saw, before the Obama administration. Certainly, we're not going to see 6, 7. We're not going to see anything. But that's another thing. It gets the Fed to the point where they don't have any ammunition other than print.
Right.
They can't lower interest rates if they're already zero.
Yeah. I mean, when you see Jay Powell get on TV and he's like, we're going to use every weapon in our arsenal in order to fight against, what he means is we're going to print more, and if that doesn't work, we're going to print more faster. And if that doesn't work, we're going to have 24-hour printing shifts. And if that doesn't work, we're going to switch to maximum speed settings. Like it seems to be a one answer to the question. I mean, part of me would love to see us go back to the 10% interest rates, because then I can just take all my money and throw it in a bank account and live off of the interest. But I don't think that's going to happen. I mean, even like a 2% interest rate right now would feel heavy compared to the, what is it now, like 0.025 or something ridiculously low like that.
Yeah, really.
Yeah,
I'm calling it out. It's official.
What's that?
You guys are getting a free call out. It's a Disney 190, 192 expiring 319. Don't go in heavy. Like I just literally I just called that out right here.
So speaking of call outs, is that so? We haven't really talked a whole lot about Options Alert Penguin. So is that really generally how it's working? You're looking for opportunities to get in on positions, and then you'll communicate that to your entire audience somehow. Do you guys use like the website directly? Is it email, text? How's it work?
It's Discord. So people can sign up at optionsalertpenguin.com. It's $15 a month. And then we just direct you to the Discord. And it's not an enormous community. So, I mean, you can hit me up at any time and like, I'll review your portfolio even for $15 a month. Like really, I'll even tell you which staffing agency to apply to. It's actually a really good deal. But basically, yeah, I talk about market conditions. I talk about what's the plan for this month and next month. What position I'm looking at to get in. I keep telling people, don't be, just because you have cash, that doesn't mean buy. Like it could still bleed. Like buying Disney 2 hours ago wouldn't have been good because it was 197. Buying it right now at 190, 191, like that might be good, But we mostly do we do it in the Discord. You have your call outs in the Discord, And if additionally, like I encourage people, like if you don't know what to get into, and you have some buying power, just hit me up, and I'll let you know what's going on. If you know, because not everyone wants to look at a screen all day. Some people just want to work, and just see a color real quick and be like, all right, that looks good. Maybe look at their TD Ameritrade, just think or swim to see if the chart looks good enough for them to get in, and just boom, But it's really as simple, just on the Discord, and we just try to just work together to get this money,
Yeah,
just retail names.
Discord is about the easiest way to communicate with a large audience or a small audience, like whatever you need to do. I don't know why Discord is free. It's like such a phenomenal tool. They just can really change the game on how people communicate with each other. I think it's fantastic. So Sam Kling is asking, so what is your Disney thesis? What is it about 190 that's got you interested? I mean, we all know the long-term thesis. I mean, once the parks start reopening, Disney Plus is on a tear. I mean, they're a cash machine. Is there something particular you looked at 190 that brought you into it?
It's a fib level.
Okay.
It's the top. It's a recent top. It's the second recent top, and I think it's the 28 fib level.
Yeah,
and then it's holding on.
That's what you're looking at.
And additionally, again, like I'm expecting inflation, and the reopening trade is still alive. So I mean, we can probably see it either consolidate between 190 and 200, or shoot to like 205. Like I really think these cyclicals are going to just get sickly bullish, like Spotify was. Like I think once we see these cyclicals. They had to take a break today because the Dow was just absurdly bullish yesterday.
Yeah.
But once we see these cyclicals where it's like I don't know about Disney, their parks are going to reopen. People need to not sleep on Disney Plus at all, and their parks are reopening, and we're at a fib level. That's why I called that out.
So I'm seeing
good balancing fundamentals.
I'm seeing like the 190-ish level was kind of a top in early to mid February. And then the next level down, like the next level of support would be about like 175 to 180 level.
The market would have to die for that to happen.
Well, I hope.
Yeah, that's what I'm saying.
Yeah.
We would have to see some real blood in the streets, and we're about to have stimulus. Like they're about to talk stimulus next week. Yeah. Like I just don't see it. I just don't see the market dying and going. It'd have to go falling 9 for you to lose that.
Yeah, Disney's really been on quite a tear, actually, when you look at it. It's almost tripled since its bottom. The market itself has doubled since the market bottom, but for Disney to triple, that shows there's just a lot of bullish energy behind it. People are.
Also, I'm bullish Mouse. I'm bullish Mickey Mouse all the time. You can ignore the call out if you don't like Mickey Mouse. That's another thing. If you don't like Disney and you're like you take it off, you're like, nah, I'll pass on this one. Pass on it. Like you gotta take all the call outs.
Yeah, there's a new one every day, right? I know my wife's got a handful of Disney. I don't know exactly what she's got in her portfolio right now. I know that AEM, I think, not AEM, ACM. Are you familiar with that one?
ACM?
Yeah, AECOM. They do a lot of construction projects. The idea is that
that's bullish.
Something that people have been talking about for so long is, are we finally going to see an actual infrastructure plan? Every administration's talked about it since like Bill Clinton. And everyone hypes up their infrastructure plan. So if we finally see something come out of the Biden administration, some kind of funding for infrastructure, then AECOM or AECOM, I'm not even sure how to say it, is presumably going to be one of the leaders of that industry. Start getting our roads and bridges back to being in order, as people always say. And trains. They're big on trains, too. I would love to see more trains in the United States. They're so built up over Europe. But if you want to take a train in the U.S., unless you're traveling around the New York metropolitan area, then you're not taking a train. Versus Europe, you can take a train across the continent.
Yeah. We're seeing it in Cat too. Caterpillar, we're seeing that at 226. I thought 200 was a little high, it was between the 190 and 200 range for a little while there. And I was like, wow, we're at 226. Are we? People are really doubling down on this infrastructure play.
Yeah.
But again, Kamala Harris has got that tiebreaker. So, Democrats might just start printing money. Bernie's going to be talking about it. And that's what I'm saying. In the short term, if you're trying to make some money, what's going to happen in the next couple of months? They might be talking about infrastructure, and they might be starting about doing a deal. But once they do a deal, we might see a drop, like we do sometimes after earnings, even after good earnings. That's something to look for.
A sell the news type situation you're talking about.
But long term, I really like tech. I think ACM could get bullish though.
Yeah, I would love to see it get bullish again. I mean, that's half of her portfolio right there. So,
Oh no!
well, you know why? Because she saw the it's like an inconsequential amount of our like overall net worth. But so I just let her have fun or whatever. But we were watching like PBS Kids or something like that with our daughter, and a commercial came on about like the Hyperloop, and she was so excited to hear about this Hyperloop because like the U.S. is just dying for some trains, and we looked up the Hyperloop, and it's every company that's trying to work on something like that. It all runs through ACM. I mean, they're like the only ones that have that capability in the United States. I'm sure you could find a Chinese company or European company that could do it for us. But if it's strictly staying American, then it's going to be ACM working on it. I'm a little bit skeptical that there's actually that will be that accepting of trains in the beginning. But I think if Americans realize you don't have to take an airplane to get everywhere. You don't have to go through security when you're taking a train. You don't have to get to the train station 3 hours early. Like, there's going to be some demand for that type of service. And I'd love to see it actually start coming out.
That's almost tech.
Almost tech.
You got tech and infrastructure in one trade?
Well, yeah, I mean, a little bit when you put it that way. I mean, I think the Hyperloop is just a small portion of what they do. It's a lot more like waste management and like water development and stuff like that. But I mean, even that, these are services that everybody's going to need. And if we do start having some more demand for transportation infrastructure, then that could be a good play. AECOM. I mean, I don't have any shares of it personally. I'm still I'm more diversified into, I've got Triple Q, I've got some leaps on SPY. I like to have a blended portfolio just to make sure I don't screw up. But when you're, playing around with it, you can get a little bit more aggressive with your stock picking.
Yeah, for sure.
And so example name is asking about Riley Reed and her experience with trains. I think, Riley's probably got plenty of experience, but we're talking about much more, worldwide type trains. But keep doing what you're doing, brother. What else we got going on here? There were a couple of questions coming through at one point. I kind of ignored them because we were talking to each other.
I got any chance of a shout out for poor Kathy Wood? Is getting totally wrecked on the Tesla above that today. No, do you hear about her strategy? Her strategy, she was talking about, she knows that her biggest names are going to come down. But she was saying, well, let me get in. I'm going to get into cash-like stocks that are already beaten down that aren't going to go any lower. So when everything drops, then I'll just sell those because they didn't really die as much as everything else did and go right back into my Square and my Tesla. Like, that's what her strategy is. It's not really a bad strategy, but I mean, she's definitely she's getting wrecked, and she knows she is. But I mean, a lot of people are coming after her too. Like, again, like I'm on LinkedIn and like talking to all these pros and these chief investment officer folks, and they're all talking about it. They're like, they hate Kathy, and they're like, which is good, I mean, if she's the best, like people are taking shots at her. They're talking about.
I mean, I think a lot of I think a lot of the criticism of Kathy comes from she invests heavily in speculative tech in the most bullish market we've seen in decades. So, yeah, of course she's going to outperform. Can she handle the fire when things go south? And I think that is a fair challenge. I don't know too much about her before she started the ARK investments. This is going to be her opportunity to demonstrate herself.
Came out of nowhere, right?
Yeah, well, I mean, it was Tesla, really, is what it was. We found out that I remember seeing her on TV back when Tesla was trading for like $100, and she was like, "I see this stock going to 4,000, absolutely, like 4,000 on the low end." And I was like, "Man, this woman is out of, she's got to be crazy." Next thing we know, we're seeing it go to 700, or no, what is it, like 2,000, something crazy, split
before the split,
and then go up. I don't even remember what it was at. It was at something ridiculous, and then it split.
It was
and
like
then it went up again.
2,200 before the split,
and then it split
something
down
stupid.
To like 250 or something, 300, something like that.
Yeah.
And then it went back up. So I think the actual price now is like over 4,000 or pretty darn close to 4,000. So she proved everybody wrong. She was the one who was right. Everybody was wrong. I think that they did a lot for her notoriety. I think now is going to be the opportunity for her to show, can we handle the fire when things aren't going so swimmingly? And ARK-X was looking like a great investment a couple of weeks ago. Now it's looking like those speculative space exploration stocks might not have the strong bull market underneath them that they're going to need.
I don't think they do either.
Yeah.
I don't know if I'm speculative enough to buy space. I don't know, unless it's like Starlink or something. I could do space internet. Like, I'm bullish space internet,
I'm holding a little bit of Virgin Galactic just because I want to see if they can get it together. I mean, I think there is a bullish thesis behind space exploration. a lot of these stocks are a little bit ahead of themselves. I don't think there's hotels in space in the next 10 years, although it would be pretty exciting.
I saw some spreads. Oh, sorry. I saw some questions about gamma as it relates to put spreads. You want to take that one?
Gamma in relation to put spreads. So, are they talking about a gamma squeeze or like gamma the Greek?
Exactly. Like I think people just don't understand gamma. Gamma's for like short squeezes.
Yeah, I mean gamma has. So when you're talking about out of the money options, that's when you really start considering gamma on its value. So as the stock rises or falls, the gamma will move that delta. So if you're talking about I want to buy or I want to sell an at the money put because I'm going to do a put credit spread, you're selling an at the money put. The delta is going to be something around 50, like 45 to 55-ish, okay? And then you've got a gamma that's going to push that delta around as the stock moves up and down. So if the stock goes up, the delta is going to get higher. And as the stock goes down, the delta is going to get lower. So the only time I'd really be concerned about gamma when I'm trading credit spreads is if I'm using really far out of the money positions. If you're using at the money, then those deltas are going to probably move pretty close together. I mean, has that been your experience as well, Russ? You don't have to worry about delta getting nailed by gamma very often unless you're really out of the money.
Yeah, unless you're like on some YOLO, like unless your strikes are just never going to happen. The only time I've ever done some strikes that are never going to happen, type play was on ticker symbol SNOW, Snowflake, and it was because they just had earnings in December, and they shot up from like 270. They were already way overvalued to like 425, and I was like, and then they had that lockout expiration, which means insiders can sell now a week later. So I was like, I'm putting my strikes to 350, and when it's at 425. But typically, as long as you're not doing some psychotic stuff like that, and it fell well below 300 too, made some good premium on that. But that's on them. It happens once in a blue moon where like you have to have the exact right conditions. Otherwise, like do not be trading like wild strikes and not giving yourself enough time, because if you do, I mean, you got all these other fundamentals, the options that are coming into play, and if you don't understand them fully, you could easily get wrecked. For example, if you're buying call options on a volatile stock that just moved up quickly, that you can bet that volatility is way higher. And when it comes to buying puts and calls straight up, you're not betting on direction as much as you're betting on volatility to go up. So, for example, if you get into something that is volatile, like Tesla or something, or Blink, and it moves up, and you get in it, and it still goes up, but it goes up slowly and sideways, you're going to see the volatility drop, and you could still lose money even though you're right on direction. So if you want to understand anything, and when it comes to the fundamentals, look at theta and look at implied volatility. I mean, that'll tell you the whole story. If you're not really understanding the Greeks, make sure you get those two down.
Yeah. I mean, the Greeks they're confusing concepts, but I think it helps. There's a lot of nerds in here, so if you think of it in terms of physics, it's actually helpful. You think of the price is kind of the baseline, right? And then you've got delta is going to react to the price. So you've kind of got like a first order derivative. Gamma is going to affect the delta, and that would be like your second order derivative. And then you've got speed, which nobody ever talks about because you usually don't need to. That's what moves your gamma around. So it's like I think it's jerk is the physics term, the equivalent of speed. I hope that made sense to somebody. But I know I see it all the time. People are all right, so like gamma is really more like acceleration, and jerk is like speed. Yeah, that's exactly how it is. So if those terms are working in your head, then continue to use those, and then you'll get the idea down. When you're talking about volatility spikes and volatility decreases, whenever you're long options, that's when you want volatility to increase, and when you're short contracts, you want volatility to decrease. And when you are in a put credit spread, you typically want the volatility to decrease, presuming that you're not selling out of the money put credit spreads. It's actually to your benefit to see volatility rather drop. And that way you get more value out of the short call decreasing in price than out of the long call decreasing in price. So you come out with a net positive in that. Did I explain that well enough? I think people understood that. I'm not sure though. I think that made sense. But Hop91, so he's one of the mods here. I watch his Twitch all the time. He asked about Norwegian Cruise Lines, NCLH. So I know that you've talked about that one before. Let's reiterate your thesis there, Russ. What do you think?
I like Norwegian. I like Norwegian over CCL Carnival.
Mm-hmm.
Because of its balance sheet. But I mean, I think again, people retire on cruise ships. Like old people are trying to go back to the retirement because it's cheaper to just live on a cruise ship than it is to maybe keep up with property taxes with your fixed income or something. And people maybe they just want to liquidate their house and just live on a cruise ship. So I mean, there's a big demand for it. And there will be as things start to reopen. I can see CCL at like $65. Like it'll definitely come back to where it was pre-pandemic levels, like eventually. So I mean, if you wanted to go long CCL or Norwegian, like go ahead. I mean, but you're going to be long. If you wanted to put credit spreads on Norwegian or CCL, let me do CCL because I don't like Norwegian's is an 80. Is they're not American, right?
Are they?
So we're seeing $25. Are they an ADR? That was aggressive. I don't know if you wanted to wait for the drop to 24, and put your put your strikes out to, put your expirations out to maybe the summer. Like that'd probably be easy money. But that's another thing, like liquidity, like you were talking about. Some stocks you'll look at it, put credit spread, and you'll see like your only options and your strikes is $5 wide on a $50 stock. Like that's huge. You know what I mean? So some stocks, for example, even Google, like. I haven't even it's the shares are liquid, but I haven't seen like the options really out there liquid. You really got to watch that as well. And that kind of limits you to your plays. But if you want to go in on cruise lines, I'm saying green light.
So Hopped is saying that Norwegian Cruise Lines is not an American depository receipt. They're actually based out of Miami, Florida.
Are they?
Although Sam does point out, though, I think this is true. Most of the ships are not actually American flag carriers. They're carrying like Panamanian. Liberia, I think, has like this absurdly large amount of ships all flagged for Liberia versus their actual home country. So that might be a source of confusion for a lot of people as well. Do the cruise lines...
That CCL dividend, though, is pretty good.
7.5 is a lot. I didn't expect them to actually have that.
And it's so far away from its all-time high. I think it'll make an all-time high eventually. You know what I mean? Like, it's got so much meat on the bone, and you get an outrageously large dividend. Like, if you're looking to add to your dividend portfolio, like, it's in the CCL. It fell today, too. Like, $3 from 28 to 26. That's a substantial percent.
I wonder if Carnival has ever indicated that they're at risk of slashing that dividend, because that's particularly high.
It's ridiculous, right?
I mean, but I'm not seeing dividend at all on Yahoo Finance. So let me check the NASDAQ. NASDAQ.
Did they slash it? Did we get bad information from the chat? They let us astray.
I think that might be bogus intel. I'm about to check it right now and see.
It might be. I'm pretty sure I heard someone slashed it.
Their last dividend was February 2020, was 50 cents. So I think somebody was mistaken when they said that there's a dividend there. But if that is their current dividend, I mean, that would be huge. Maybe they'll go back to it once they start getting back at sea and being profitable. But example name, thank you for the super chat. I appreciate that. And your banana emoji. That makes me also really happy. That's a really fun one.
Yeah, it was cut, right? Yeah, I knew it was cut.
It sounds like something that would get cut. Like the airlines, the cruise lines, they all cut their dividends.
Yeah, no one's paying dividends if you ain't got, like, what do they even do now?
Well, it's funny you should bring that up because I recently added to Norwegian Cruise Lines as revenue. So what they're doing now is they're selling people like not bonds. They're selling people gift cards that are more than their face value. So or less. They're selling their gift cards for less than their face value. So I got a $500 certificate.
That's
insane. I paid $250, and they gave me a $500 gift card to use in the next 3 years. So they're able to generate some revenue. And I think what they're banking on is people just like not using them. Or at least, they can start generating their business again now, float themselves, and even if they don't quite make that $500 or that extra $250 off of me, they can pretty easily afford that little bit of loss. And in exchange, they get people back on their boats, they generate interest again, they're starting to put their numbers back out there. That's probably what they're looking at. So I'm all about. I mean, and honestly, I love Norwegian Cruise Lines as a cruise. Like, I love the ships, the cruises. I think they're fantastic. So I am more than happy to say, here's $250. I will cruise with you guys in the next 3 years for sure. Let me get that $500 gift card. And the Wanderer just... Norwegian's
better than CCL for sure. Like, their balance sheet.
Yeah, Norwegian is actually probably one of the better postured ones for it, I think. And I just bought something from them, so I'm pretty positive. I'm bullish on Norwegian. Thank you, The Wanderer, for the super chat. I appreciate it. He says, down $6,000 today on Delta Airlines. Let's go. What is Delta doing?
Go back up.
I need to know.
Go back up.
I mean, remember how terrible everything felt like on Monday, and then we saw yesterday things rose again. I mean, it's only a matter of time. I don't think the bull market is over. I think we're gonna, we needed a washout. We got the washout. I didn't want it to happen, but here we are. So we got to, look on the positive side. We've got payday coming up in a couple of days for, everybody who's employed, and it could be an opportunity to get back into some more long positions. But I got to pee so bad, so please continue talking while I go there.
Yeah. All right. So while he's gone, so tell me what you think about this chat. I was thinking like me and Mike. Yeah, we're thinking about doing like some technical analysis. Like we'll be on Zoom on like a dirty car window for fun. Like I'll roll up because I'm in Arizona. All the cars are dirty, right? There's dust on the back of the car. I'll roll up on a car, and he'll tell me what stock, and I'll just do the technical analysis on the dirt in the back of the car. Like, you guys think that'd be hilarious? I think it'd be super funny. No? Well, just let me know. Mike and Rusty and their dirty car windows. Technical analysis brought to you by Mike. He's fine. He's fine, guys. He's fine. Yeah. What are some stocks you guys trying to get into? Like, let me know. Like, I'm right here. Like, we do some analysis right here, right now. Like, call us some ticker symbols. Like, what you guys looking at? I pitched them the dirty car window idea. They're hype.
I was on mute that entire time. I'm like really embarrassed that I just.
Wow, you guys didn't hear me at all?
No, I was on mute.
Oh, okay.
Oh no, no, they heard you. Yeah, they heard you because you're coming. Okay, it's me. It's me that was on mute right now. So everything I just said they didn't hear. That's okay. Yeah.
Okay.
I heard Russ talking about it though. I heard him talking about the back of the car dust idea, doing analysis. I think that's pretty cool.
No on GNOG, yes on ExxonMobil. If MRO is like an oil company, that's Marathon, right?
Yeah.
Then that's fine. If you want to do, there's another one, MARA, which is Bitcoin stuff. Like, you could do that. Plant PLTR, yes. Fuku, no. Airbnb, yes. It's a reopening play. And that's, look, just reading it. Like, okay, that's what I owed you. I paid up.
I think Russ has clearly made his case for why you should check out a subscription to Options Alert Penguin. I know there was one guy in here earlier that said he was really close to signing up. I don't know if he's done that or not, but I hope so. I mean, it's a really cool project you've got going on there, and I mean, it's such a saturated space. But there's not a lot of people out there that are actually looking at it from the prospect of spreads and long-term analysis. I mean, we see like the TikTokers and the who else, like the Twitter type folks. It's all about these super short-term, very volatile options plays, all long. Nobody really looking at spreads to it. So what you're providing to the community, I think the world needs somebody that's got a little bit different approach toward alerts instead of just saying, "Hey, buy GameStop right now."
Yeah, no, not buy right now. Yeah, that's another thing. Like, yeah, because your audience is a little younger. Like, if you guys are young and you're like, $15 a month, like, can I try it out? Like, all right, fine. Like, hit me up. It's my full name, RussellDeanHarris@gmail.com. You can email us on the site, optionsalertpenguin.com. If you want, and like we could do a trial if you want, like month or two. You guys could try it out if you're on the fence about it, see what's up with it. I was doing that in January. I kind of took it off because I thought $15 was pretty easy, but I mean it's fine. It's fine either way. Whatever you guys want to do. If not, like keep watching Mikey. He's hilarious and he's got some really good info.
I mean, with my
his channel's pretty good too.
With my Patreon, I have the option to change it so that you have to pay up front, but I don't want to do that because I want to give people the opportunity to at least see if they like it first before they actually end up paying, which is legit. There's a couple of people in here right now. I don't know if you're catching the live chat. Handful of people are interested. They would love to see that trial come back. if that's something you produce, I guarantee you'll get a handful of signups like immediately.
All right,
So
fine.
keep it in mind. All right, he's going for it. I think we've talked him into it. But
what is that? Wix? I think I use Wix.
Yeah.
You want a trial? I'll do the trial right now. Let me edit the
he's going to
website.
set up the trial for you guys. I know. I mean, there's a lot of interested people in here, so I think this will be a good this will be a good way to spread the word about your program a little bit. It looks like a lot of people are actually pretty hyped up about this. We see it all the time, like on Instagram,
millions.
I was doing
chat trial.
There you go. He's putting something in there. Tully's definitely going to do the trial. Frank Nichols is going to do it. All right, awesome. Okay, cool. Yeah, you got a handful of people in here. What I was saying, though, we see very, very frequently on Instagram, on Twitter, TikTok, everybody says, like, really, really stupid shit about what stocks you should buy. And they're basing it off of whatever Yahoo Finance says is up the most that day. And they're kind of walking people into these traps where they're just looking for quick gains, which is fine, but you have to know that that's what you're doing. I think a lot of people don't get that when they're just reading somebody's Instagram that talks about how fancy their life is. Meanwhile, they don't own a car, or they rented a car so they can show you pictures of it. You got to get the real deal here. And realistically, and even though it's a saturated space, you don't find a lot of people all the time that are maturely giving alerts to people that can actually take advantage of them. I think that's what we're doing here, which is why I got him in on this.
A lot of hustlers out there that don't know jack about theta decay, that are just like, let's get into some calls and puts straight up just because it's all hype. Like, don't be doing that, guys.
I mean,
you lose all your money.
My favorite TikTok finance girl, one that I saw a couple of days ago, and she was like, hey guys, all you need is 8% interest on $100 every day, and you'll have $2,000 in the next 2 weeks. I'm like, she's like, this is called compounding your money. Like, it's a new concept. Like, oh great, I can compound my money. I've never heard of that before. See people like that all the time. It just drives me crazy. We need somebody with like some alerts that are real. Like, this is an opportunity to rotate sectors, not an opportunity to seize 8% interest each day. Like, it's just not realistic. And it drives me nuts because they'll have like, 400,000 YouTube subscribers and I don't. And I'm like, should I just dance for the camera a little bit? Start telling them some stuff. But you guys get the deal. Hey, all right. So Russ, I believe he just finished setting up that trial. Is that what you did? Yeah,
got that 14-day free trial for you guys. Let's get into some threads. For a 14 days free trial, we'll like we get in today. Like tomorrow, we're gonna have those monthly call outs. So you're basically just getting like, hopefully we get like a month of doubling your money. Like this month, I'm up like 107%, and I've just been taking it slow. Like, I don't know.
That's a lot. You're scaring me now. How the hell did you pull that one off?
I'm telling you, like, as long as you like get in on a dip, and you're just super chill. And you just walk. For example, I got into Blink at 33, 34. Like, you get a bunch of those, and even after a crash, it's like it's at 40. It's not coming back down.
Yeah. Hey,
how you just let that expire? Like, I didn't encourage you guys to let things expire because, like, I don't want you to go from green to red. But like at that point, like, let that expire for a max gain. Screw it.
How do you take advantage of that trial then? Is it just on like the homepage? They need a code. What's
ding. People are already joining. Like, I'm getting dinged on my.
Oh, are they?
On my
how do you how do you get in on it though? Like, what's
so it's the options alert. Do you want me to quits drop in the chat? He posted that.
Oh, did somebody drop the link already?
Yeah, I could put it there. Can I put it there? I don't think I can.
I don't know. I can type anything. It's not going to get modded out. So I got optionsalertpenguin.com. Is there like a referral code or something like that they need to get the discount? To get the
no, it's just a straight up plan that I created just now.
Oh, cool.
And it says Mikey Millions chat on it.
There you go. All right. What the hell is PayPal?
It's under pricings and plans. You have to click that.
Yeah. Okay. All right. There you go. So we got
I posted it. Alex, I posted it.
We got the 2 week free trial, so you guys can take a pass at it.
Ding, ding, ding. We're getting ding hard.
And if it's not for you, hey, no hard feelings, guys. So it looks like Sam Kling, he's a mod, so he can post whatever he wants. He dropped a link in there. All right, let's see if people get on board with it. So, and if you're looking to follow somebody who's not going to try to shwill you, it's Russell. He's one of the real guys. That's why I got him on here. Because I knew it was something good. He's not going to try to deceive everybody. we can count on some. We need people that we can count on. And I think Russ.
I'm
is one of
serious.
those
I want everyone's account to grow. Like I'm real serious about that. And if you're young and you need some extra help with other things, like I'll see what I can do.
Is that people signing up right now? Is that what that is?
Yeah.
That sound?
Yeah, I'll turn it on.
Is that like 6 people in the last 5 minutes?
35.
35 people in the last 5 minutes?
38.
Russell, you owe me a beer.
Oh God.
I expect a Guinness.
You want a Guinness?
I would love a Guinness.
Send me your address. I'll send you some Guinness.
All right, cool. I appreciate that. There we go. All right, so hey, you guys got.
So, but when are we getting on that? I'm talking about my most recent pitch.
You want to do the technical analysis on the back of cars? 5 episodes.
No, 5 episodes of the Mike and Rusty and their dirty car window technical analysis.
If you can find a way to actually draw those lines on the back of a car window cleanly, then by all means, let's go for it. That would be pretty impressive, and it's even better if you get caught at some point working on somebody else's car, and they give you.
It'll happen. Like, what's up, fool? What are you doing on my car, fool?
Well, I'm doing technical analysis. Get in on this. Check this out. So we're gonna buy Pfizer at 30, and then we're gonna sell. Yeah, that'd be pretty legit. Yeah, hey, let me know when you're down for it. And I'd love to see some snapshots of Arizona anyway, so we can see what it looks like out there. I'm telling you, I miss living out there. It was awesome.
Yeah.
So, and to see John, so it looks like Sam Kling dropped the link just above. So scroll up a little bit, and you're gonna go ahead and find it. God, there was something else I want to talk about. Oh, somebody in the chat, they had asked us about using poor man's covered call strategies. Is this something that you do as well, or you stick pretty strictly to credit spreads?
I don't even know what a poor man's covered call is.
All right, so I'll take my minute here. So with a poor man's covered call, you're buying a long-term call, and then you're selling short-term calls against it. So everybody knows what a covered call is. You own 100 shares.
Oh, like a calendar?
Yeah, it is a calendar spread. It's a type of calendar spread.
Oh, okay.
So you will, everybody knows about the covered call. You own 100 shares, and then you sell people calls, and you collect premium. That's kind of the idea. But what if you can't afford 100 shares of Square? Like maybe you don't want to do put credit spreads. Maybe you want to do something that can last even longer than that. So if you don't have 23 Gs to drop down on Square, then you can go ahead and buy a long-term call, like 6 months, 1 year, buy a Leaps option. And then you can use that as collateral to sell shorter-term covered calls and pull premium from it. So it's a much cheaper way to get in on the covered call strategy. That's a video that I'm working on right now, actually. I started recording it today. I just didn't finish in time because my daughter woke up. But that's going to be the next one from me. And I mean, I'm telling you, I love that strategy. I took advantage of Snap when it was down to like $48, bought a bunch of Leaps on it. And yesterday it was looking phenomenal. I mean, it's still looking pretty good. But yeah, it's down a little bit today. But when you're bullish on something like that, then it's a good opportunity to start getting in on covered calls and Leaps with a cheaper price than you would by just having to buy shares outright. Well, that's why I like the PMCC. Somebody was asking us if we can do a collab on it, but if you're not familiar with it, that's fine.
I'm down.
It sounds like something you could learn pretty quickly. So
let's do it. I know calendar spreads. Let's do it.
I mean, you clearly know what you're doing, so you could probably read about it for like 45 minutes and then be like ready to go, teaching other people how to do it. I mean, that's one thing that a lot of people on this channel, they're new, they're kind of just getting involved in it. Everything can seem so overwhelming in the beginning, but once you kind of got the basics down, like you can just look at a strategy and you just understand what the strategy is trying to do after a little while, and it starts connecting pretty easily. So those of you that are new and you don't quite understand everything, just give it some time, keep reading about it, try it out with low risk positions, and then it'll just start coming right to you. So let me see. People are down with this dirty cart window technical analysis thing, though. We might have to try it. I mean, I thought it was kind of a silly idea.
We could do it for sure. I think it's hilarious. It would be funny.
Yeah,
it would be like a 5-minute episode. I just roll by. Like we're both like you, because you could be like you're telling me what it's gonna be, and I'm just drawing the lines.
Oh, yeah.
You're like we're both on a Zoom, and you're like, okay, we're calling out this week. We got these 3 stocks. Do them real quick. Watch the next car.
Yeah. Oh, I see what you're saying. Yeah, almost like the announcer type thing, and then we got you drawing it like it's a football play. Okay, I'm with it. Yeah, and we can look at some of the ones that you're rotating into as well. I mean, by all means. I mean, this right here, when the market is dropping pretty drastically, this is not when I thrive. This is like when I cling and reinvest. But
yeah,
if you're a credit spread type person, then there's opportunity. Do you ever do call credit spreads?
Yes, but it's just that a lot of people that are too new are like, if you're doing a call credit spread, I would do it on companies that are terrible and have bad. See, opposite of a put credit spread, even in fundamental analysis. Something has bad earnings that's never going to go back up. that's completely overvalued out of nowhere. And then additionally, with a call credit spread, you want to take profits now, because if the market goes up, bad companies can go up too. So just because, for example, Snow and Zoom are freaking PE ratios of 1,000 or something, like that's ridiculous. So you can do call credit spreads if you want, but if the market is dropping super fast and it's going falling knife, and it's going to continue going falling knife, I don't think it will. But if it does, it's better if you just do put debit spreads and just keep those strikes right and then take profits that way. A call credit spread is I think they're pretty dangerous, especially if you don't know what you're doing and you can't manage risk and you have iron hands, which a lot of you do. That's why I keep saying, just do put credit spreads on good companies with the further out expirations and keep those strikes low, and you should be pretty profitable, and make sure to take profits and be careful. And it should be pretty fine. Do some poor man calls. Boom. Yeah. Those are pretty good too.
I haven't had a ton of success with call credit spreads just because for so long it's felt like borrowed time. It's only a matter of time before the stock starts going up again, especially in the market that we've seen for years and years. If it drops sharply to the point where you want to sell call credit spreads, it usually means that it's going to spike again pretty soon. I don't think. Yeah. I think what was it last week was the first time that we had 4 red days in a row in I don't even know how long, since April, maybe March. April.
Exactly.
It's
and when you want to do I think call credit spreads are only good for if you see something like GameStop. Usually when you see something like a GameStop and it goes up, it'll come back down. You'll see this tent pattern, and you want to get at the top of the tent and put those strikes there and give yourself 3 weeks, and you'll probably profit. So that's usually when you see a pump and dump if it's over $5, or you see as long as it's not a short squeeze mania like AMC and GameStop. Don't do it on AMC and GameStop. But as long as it's not that, I think call credit spreads are good for that. If you're seeing stocks that just went up super stupid massively. For example, if you see Amazon, even Amazon, I did a call credit spread on Amazon 2 days before the end of December, and it shot up from 3,000 to 3,350, 7.5% in a day. That's a little too much even for Amazon. So what I did is I'll shorten my time horizon, because Amazon could definitely go back up because it's got fundamentals, and I'll put those strikes above or even at the money. And I'll do this expiring this Friday, because I don't want to give it time to go back up. So that's another thing. You can shorten your time horizon and take profits immediately if you're doing call credit spreads, or just go for garbage companies or pumps. But I really think the market is mostly bullish. It's better just to be mostly bullish.
Yeah, by and large, I agree with that too. I think, I don't know when you started investing, but I started investing in 2010. So I pretty much hit that bottom tick as when I started, and is for so many years, people like me have become so spoiled into thinking that all you have to do in order to make money is just go long. I don't know if we're seeing that change anytime soon, but for the past decade, that advice that you just said there I think it's spot on. When you see the market dropping quickly enough that you're interested in taking on a bearish position, that's usually when it's about to start going up again. And that's why I haven't personally had a whole lot of luck with call credit spreads, but the put credit spreads have been better. And personally, my favorite has just been selling puts. I've just gotten rid of the whole spread portion specifically, but that's also because I have a margin account that allows me 400 G's worth of marginable balance if I want to. I've never taken advantage of all of it. I think the most I've ever done at a time is 80. But if you've got a margin allowance like that, then just selling naked puts has been just killing it for years and years. I wish I had, been able to predict that the bull market would last until 2021, because I would have just kept doing it the whole time more aggressively and really started printing with it. Draxstar is down today from 183% to 1%. Hey, at least you're still green, Draxstar. You guys want to know how much money I lost today? Let me just look. Just for fun. I'm sure it's a good 5-digit figure. And it makes me sad knowing that I can lose a year's salary in a day. And not be too upset about it. Well, I hope not. It's not that much. It's not that much in a day. A couple of months' salary. 24,000. Okay, so this is the second time this week that I've seen my portfolio balance drop by 24 G's. But then yesterday, it's up 19. So it's a pretty volatile market right now. And I am of the conviction that if you're looking to get into some more long positions, now's an opportunity to do it.
Oh, for sure. For sure.
I still got to wait a couple more days until payday. But And then what did I get even from this video so far? I got an extra $5.44. You know where that's going? It's going straight toward a share of QYLD.
Oh, yeah?
Are you familiar with QYLD?
I'm not. What's the other key? QYLD.
So
is that what your chat talks about? QYLD?
I mean, sometimes, yeah.
And Riot?
There's not a ton of people that talk about QYLD, but that's one of the, it's pretty close to a fixed income type position. So what I'm looking to do now, since I want to go into full-time YouTube, I want a nice, solid foundation underneath me. So QY, I'm sure it's getting hammered today, but it is the covered call ETF. So every month that fund buys 100 shares of, or not 100 shares, but blocks of 100 shares of triple Q, and then it sells at the money covered calls expiring in 30 days. So that company will receive premium, and then it distributes that premium to shareholders at the end of the month. What's really cool about it is that it already pays the tax prior, so it's all tax-exempt dividend. Technically, it's not dividend, it's yield. But if you're looking to move into fixed income, then that 11%, I mean, it's going to go up, it's going to go down a little bit, but it generally, fluctuates between 9 and 11% of yield every month. So good.
It looks flat too. It looks you could condor the crap out of that.
You could. The premiums really aren't very high, so unfortunately, you're not really going to make like a ton. But yeah, you probably could condor it without too much trouble. I mean, I sold the $20 put expiring in August, and even though the market's been getting hammered lately, we haven't seen $20 on QYLD since mid-April. So and that was for a couple of weeks. But I'm loving that opportunity to get in on that as kind of like a fixed income alternative with some of the money. And it's 11% is not going to give you a huge amount of money unless you really go all in on it. But even taking a handful of shares here and there every month, that's going to add up. And for a stock that barely moves, it's not like the money's gone as soon as you buy shares with it. It's there. You get it back whenever you sell. So anyway, that's just my little pitch on why QYLD is a fun one for anybody that's looking to get out of the roller coaster and you want to just start moving toward a more stable portfolio, kind of a fixed income type thing. Then QYLD is a good portion of it. That's why I'm starting to rotate into it. Don't use the QYLD for growth. It's not at all good for growth. You're going to underperform the S&P almost every year, unless the market's really red. Well, that's where I'm starting to put a little bit of extra money now because I want to turn this into a full-time gig. I have fun with it, actually. It's awesome. Decimate asked a tough question to us. He says, what do we think the market is going to do tomorrow? I'd like to answer that question. My daughter's starting to wake up, so I don't have too much more time. But let's go ahead. Russ, take a stab at it. When are we hitting bottom is really what everybody's asking. I'll let you try it first. Yeah, go ahead. Go for it.
Okay, let me look at the NASDAQ. We got /Q. Okay, I mean, we're double bottom currently on the NASDAQ. And then we're seeing the Dow /YM. It really died. On the 20-day 1 hour, it corrected. Okay. No, it didn't.
I mean, we may have hit bottom.
It's still at its high. It just lost what it lost yesterday. I mean, it lost what it gained yesterday.
Yeah, so really we're back to Monday's prices.
Yeah, I mean, the Dow fell. The Dow didn't fall this week. The NASDAQ did. So the Dow's completely fine, guys. That's what I keep saying. Well, guess what did? Cyclical. So, now's the time to get into Disney and ExxonMobil and Marriott is even looking attractive at 151. I wanted 145, but I might be being greedy. Other such stocks.
Marriott I think come down though. Let me see.
If you have tech, just hold it or roll it. That's what you should do. But if you have everything, if you have money on the side, you need to get into cyclicals and then just kind of get rid of them once there's no more meat on the bone. Once everyone's tired of it, then just get rid of them and go right back into tech.
Yeah, I'm looking at. I mean, my portfolio right now, I've got airlines, tech, triple Q, SPY, tech. It's tech across the board, which I think it's a pitfall that a lot of us have fallen into, and I'm certainly a victim of it. You look for yield and you look for defense kind of at the same time, and I've got a lot of financials and stuff like that too. It's all a lot of dividend plays in there, but the bulk of the portfolio for me, and I think a lot of other people too, has been tech for the last year, really, since around this time last year, because the gain that we've seen from it has just been tremendous, and it's quite painful right now when you kind of get caught flat-footed. Maybe you have some hedges, maybe you don't have any hedges at all, but it's almost certainly not enough to compensate for this. It really hasn't. It's not that bad. I mean, it's a pullback, really, technically.
Yeah, it's just a pullback. It's not terrible.
I mean, we're looking at the triple Q topping at 338. That's really only $24. That's less than 10%. So it's a pullback. It's not even a correct, or is it? It's a correction, but not a pullback, something like that.
If it's more than
pullback is 5.
It's a correction.
I think pullback is 5, 10 is correction, 20 is bear market.
I don't think it'll go bear market.
No,
There's too much liquidity.
We're not getting there.
Yeah,
I don't think we're getting there.
I think we're seeing double bottom in tech right now. I think AMD. No one's talking about AMD, guys. Yeah. AMD is worth at least 120 in my book. Like it's 82. Like if you were like, you know what, I have $1,000 right now, and I want to double it between now and July, like AMD, like I would even be aggressive. You could do like 84, 85 expiring in July. Like that doubles your money. Like put credit spread, like 100%. Like you're seeing some really good deals, but definitely, I don't know. I would definitely keep 10% of your trading account, like your buying power. Like you just have 10% buying power at all times, at least.
That's what I. Like today. That's usually what I do. I'll keep like actually not 10%. I usually keep like more like 5. But I like your idea there. Your sentiment is like keep some cash on hand at all times because you never know when an opportunity is going to pop up. And you have to be in the position where you can actually do that. Mangle Dangle disagrees hard on AMD. I agree with Russ. I don't know if I can put a price target on it, but I do have the bullish stance on it. I don't know if we're looking at 50% increase from here, but I'm definitely at the 80s. I'm bullish. I'm bullish at 90. In the 80s, I'm definitely bullish on AMD.
I think over 100, maybe 105 by end of July. 110 starts flirting. It'll get back to 120. It'll get up to 120.
Yeah, I mean eventually. Yeah, I think so. Although, what's his name?
But even still higher than it is right now.
SDA Das Dad Sada, very creative username. He says that he lost his entire college tuition in 5 minutes. So,
what did he do?
If you lost 100% in 5 minutes, or you really lost your entire college tuition, I'm going to assume a couple of things. One, you either have a very cheap college tuition. 2, you were already extremely rich. Or 3, you're taking way too much risk. Like you should never ever be in the position where you are losing that much money that quickly. I mean, you have to be long calls basically to be losing that type of money right now. So my advice would be
unavailable.
Yeah, go ahead. That. Yeah, you see that already? Okay. So my advice to you, if you're in that third category where you've taken on a tremendous amount of risk and you're just seeing the money just melt away. You got to go through some reflection here and decide if this is money that you couldn't afford to lose, then readjust your portfolio to take on a nice solid base with 100K gone in 5 minutes. Okay, that hurts. Hey man, the way I look at organizing a portfolio, put 50% of your money, that foundation, put it right into an indexed ETF, whether it's triple Q, whether it's SPY, IWN, VQ, it doesn't matter what it is, IWM, VQ. Take it and put it into a nice, diverse indexed ETF. You cannot lose 100 grand in 5 minutes on an indexed ETF. So do 50% in that. And now take 25%, like another 25% or 30%, something like that, and pick a couple of ETFs within that sector. So if, like I have triple Q, right? But I am particularly bullish on semiconductors. And I'm particularly bullish on airlines. So I'm going to go and I took about 30% of my portfolio and I bought those ETFs for that sector. So now I've got 50% in triple Q. I've got another 25, 30-ish% in a couple of sector ETFs. And then with the remaining value, now you can start playing. If you want to take 20% and gamble on options, I mean, that's up to you. You could buy some particular stocks with it. You can, you have your play money. So you kind of set up this pyramid type infrastructure. 50% indexed, 50% industry, or 30% industry, and then you get another 20-ish% to do what you want to with it, whatever that may be. And that way you protect yourself from these tremendous, massive losses, and you virtually guarantee that you're going to make money over every 5-10 year period. Some substantial amount. I don't mean pocket change. I mean you're going to profit over those types of time periods. So switch your game up a little bit. I hope you're not in debt. I hope you didn't go in debt to take that money out. But it's not over yet, man. I mean, like 100 grand, yeah, it sucks, but it's recoverable if you have a job and you start making some more sophisticated investment decisions. Unfortunately, you had to learn a lesson with 100 grand of loss, but you can get there. Yeah,
Oof.
so Dragstar
Ouch.
says the same thing. He says,
What did
invest in
he
it.
do to lose that money?
It
Was it
sounded
just
like he was long calls. Straight FDs.
FDs?
He says
You
he's
don't
not
have
still
FD.
invested all gone. I think he didn't actually say what he did. I'm assuming it's long calls. There's really not a whole lot of other ways to lose that much right now. Yeah, it looks like Dragstar really, I guess he's reiterating what I had said there. He says, invest with the pyramiding method, 50% indexed ETFs, 30% spread among whatever industry or sector ETFs, and then the rest into individual companies. Yeah, that's pretty much what I do. Good recap there, Dragstar. Appreciate that. And it sounds like Jesus Christ wants to sign up, but he's having a hard time there.
I made another plan called Mikey Millions 2. Maybe like some with the website, I don't know. But I made an additional plan that if the one link doesn't work, then click the other one. But try it again. Try refreshing your page.
How many signups are you at right now, just for my curiosity? I'm dying to know. I'm dying to know. 58 for real? That's awesome.
And a lot of people just pay it straight up.
Oh, wow. Awesome. Dude, hey, congrats. You have clearly struck a chord with your method here. 58, says Miss Stormer. So, awesome. Good stuff. Let's see. What's my daughter doing? Yeah, she's like rumbling. So, I'm going to have to get rolling here. If there's somebody, I want one more really good question that we can approach. So somebody give me one more rock solid question, and then we'll wrap up with that. I think this will be cool. We've been at this for over 2 hours now.
Dang.
I didn't even actually, has it? No, it's been like an hour and 40 minutes, something like that. Yeah, it didn't feel like that long. I feel like we were getting there. Sleepyhead. My wife's texted me. She's at work at a COVID clinic today. And good news, COVID numbers are decreasing, at least in Virginia anyway. Jay Berg asked, all right, so he asked a question. What is the meaning of life? All right, Graham Elliott asked a much better one. Snap, is a synthetic long a good play? So here's my assessment of Snap right now. So I think when I saw that stock drop to $48 because all of the social media stocks were dropping when they all banned Donald Trump all at the same time, I said there was no way in hell that type of move is going to cost a company 15% of its revenue. There's no way in hell that was justified. So I took on the long position. Now here at $65, I am still willing to take on, I'm holding my long position. I think Snap has a lot of positive momentum behind it despite this short-term pullback. And I think over the next 5 years, we're going to see it just keep rising. I'd love to see it get acquired by Facebook at some point for like $200 a share. I don't know if that's ever going to happen because what's his name? Ethan Spiegel. He is not willing to sell, but that just means more good news for shareholders because you've got somebody who's behind the company, willing to keep pushing it to do bigger and better things. You've got a lot of year-over-year growth ahead of it. So I would absolutely go long Snap and just hold it. A synthetic long play is a little bit more risk. I think you've got to be willing to look at a very long-term synthetic long to make sure that you're in a good position. But if you're willing to do that, like 8 months, 12 months, then definitely take it on. What do you think, Russ?
Yeah, for sure. If you're a bullshit company and you just want to go synthetically long, go ahead. You know, and you get in low enough and you've done your research, you looked at the PE, you've looked at the competitors, you like the management team. And that's why I keep saying AMD, like that CEO, everyone loves her. Like NVIDIA, like they make mistakes. But we have, what's his name? I got options. He took that Disney spread and he's up 12%. He said, that's super cool. Get your money.
There you go.
I mean, take profit. Screw it. We'll get ExxonMobil tomorrow.
Here comes the money. Awesome.
I love that intro. That's a pretty good intro.
Yeah. Hey, you know what? Maybe I think while we were talking, maybe we hit the bottom, at least for today, down there.
It looks like double bottom right now. I think we just read the low.
About an hour ago, it looks like we really potentially hit the bottom. I mean, it's still anybody's game at this point. We've got Power Hour coming up in 50 minutes. It can still go in either direction. But I'm feeling a little bit more confident that you are still of the bullish conviction, reinforces my own bias. And as we were talking, we started seeing the market hit those bottoms. So I'm feeling pretty good. All right, I gotta get rolling here. Hey Russ, check out, a couple of people are saying they're not actually getting the Discord link. So I don't know if you're seeing that.
They're not getting the Discord link? Oh, I haven't. Yeah. I have to go into the website and issue you guys Discord links after I get off.
Okay, that's probably like the very first
also,
thing
the Discord link is on, if you go to the main page, the main page and go down to scroll down. It says "Contact Us." The Discord link is on that page.
There you go. All right, cool.
But additionally, there was a guy. What's his name? Draxstar. He said, "Hey, hi, Mikey. Can you look at the risk portfolio analysis I sent you on Discord?"
Yes,
you send it to me.
I did. Oh yeah. Go ahead and send it to Russ too. But Dragstar, yes, I did read that. Too. I read that like 2 times, and I really liked it. I'm sorry I haven't responded yet. Your messages usually require a lot of brain power, and I got a lot going on.
Oh really?
I promise you, I did read it, and I thought it was actually really cool what you put together. So I am going to get back to you on that.
Does it go pretty heavy?
I promise. Yeah, he actually put something together really cool. Yeah, send that Russ's way. I'm sure he'd appreciate it as
wow.
well. It's cool.
That's cool.
Oh, did he send it to you? Yeah, he's got a lot going on. But all right, I do have to get off now. I really do appreciate this. Russ, thanks for the opportunity to collaborate and talk. I'm sure we'll be doing more either similar stuff or we'll try to mix it up a little bit and do your, back of the car window technical analysis. So it'll make something work. All right, and I'm really glad that this audience over here found it interesting what you're putting together too. I really do think it is a cool project, and I'm glad that it struck a chord with a lot of people, and that you've happened to make people 12% within an hour. So
yeah,
pretty darn awesome. So, great stuff.
Get your money good.
Yeah, awesome. All right, I'm gonna get rolling, man. Hey, Russ, been great talking to you. Thanks everybody for tuning in. Appreciate it. See y'all next time. All right, I just ended the stream here.
Okay.
All right, awesome.